What's up, trader? So today we will do the top-down analysis of USD CAD. We will look at the trade that I took during the last week, and we'll check for the possible entries for the week incoming. So let's get it. So to start the top-down analysis of USD CAD, we start off the monthly time frame. So as you can see on the monthly time frame, the trend is currently bullish, and we're making higher high and higher lows. So what you can see here, the last high here that represent the resistance zone got rejected by those candle here with big wicks to the upside. So what we can expect the price to do around this price here, we can expect the price to retrace to the next zone of confluence, which is the 61.8% of Fibonacci, which is a zone of support as well based on all those push here. Also on the monthly time frame, I'll just delete that first. You can see that there is an invert head and shoulders there. So the price may retrace to the 61.8% of Fibonacci and to retest the neckline of the head and shoulders. So the potential target of the head and shoulders will be first this zone again here because it got tested twice. And if we break this zone, the next target will be based on the head and shoulders will be the distance in between like the head and the neckline. So it will be approximately to 148 or 149. So approximately this price here. So only base of the head and shoulders. So now we're done with the monthly time frame. Now if we go to the weekly time frame, you can see that there's no much details compared to the monthly time frame. So we can see here the trend is still making higher highs and higher lows. So the trend is bullish. So we're now expecting the price to retrace because we're making a lot of exhaustion here. The exhaustion, sorry, above the price here, and a lot of accumulation of candles around this price there. If you look at the price like more closely, you can see that the 38.2% of Fibonacci acting really hard as like a resistance and support zone. So you can see here with all those candles here, the price the 38.2% Fibonacci acted as a support zone, but now we broke through the 38.2 and then we retrace and we're retesting the zone of 38.2% of Fibonacci. So we made a big wick to the upside hit there that represent a lot of buyer exhaustion. So this is for the candle pattern. If we take a look to the resistance and support zone, you can see that here the pink zone above there, like the price there, is a zone of support now for the price. So the first target of the retracement that we are doing currently will be the pink zone here, and the second one will be the 61.8% of Fibonacci, which is a confluence with the monthly time frame because of the blue zone there. So this is for the weekly time frame. Now if we go to the daily time frame, you can see that the trend is currently bullish, overall is going up, but you can see that the structure is currently bearish. We are making lower lows and lower highs. So what we expecting the price to do, first we still expecting the price to retrace to the 61.8% of Fibonacci, which is a confluence zone with the pink zone of the weekly time frame. So our first target for a buy will be this zone here. And our second target for a buy will be this zone here based off the weekly and the monthly time frame, the blue zone. But if we take a look more closely to the price and the structure we're making right now, you can see that there is a possible head and shoulders in formation. So here we made the left shoulders, the head, and we are making the right shoulders. So you see here there was like a support zone that we broke through, and then we re-break this zone to the upside and the break of the trend line with those push here. So we broke this zone here and we are currently retesting this zone. So we have a confluence of support with the red zone and the trend line. So here if there's a buy signal around this zone here, I will for sure take the trade because we can still make like a lot of pips base of this move. So as you can see here, if we are making like the head and shoulders, our first target will be the first zone here, which is 230 pips. The second one is 335 pips, and the last one will be 535 pips. So this is if we are making something that tells us that we can buy around this zone here. But if there's nothing that tells us that the price will still will go up, will still go down, and our target will be the 61.8% as I said earlier, and then the blue zone. So this is for the daily time frame. So now let's go to the 4-hour. So now we are on the 4-hour time frame. So we just respect what we said based on the daily time frame. So we are currently waiting for buy opportunities around the red zone here. So if we look to the structure of the 4-hour time frame, the only structure that we have to take an entry is this zone above the price. The problem is that there is 100 pips before we reach this zone. So if you want to take your entry at the break of the 4-hour structure, which is this one here, it is the safest way you can take the trade, but you lose 100 pips and you have a less interesting risk reward. So personally, what I will do, I will go to a smaller time frame. I will look for another structure with more details, but the entry will be more risky. I'll get more pips, my risk reward will be better, but the entry is more risky, so there is more chance that I lose the trade. But if there is no buy signal on the smaller time frame or the 4-hour and the price still go down because of the weekly and the daily time frame that we spoke earlier, I will just wait for the price to reach the pink zone and see if there's a buy signal around this zone there. But for now, since we are in the red zone and the red zone still support the price, I'll go to the smaller time frame and I'll try to see another structure to take an entry. So even if the entry is riskier, I prefer doing it that way. But if you prefer having safest trade and like your risk tolerance is like lower than mine, you can wait for the break of the structure above the price, so the break of the structure of the 4-hour. So now we'll go to the 1 hour or even 30 minutes to see another structure. As you can see now, I'm on a 30-minute time frame because the 1 hour time frame has no better structure than the 4-hour time frame. But on the 30 minutes, you can see that there's more details and more structure. So as you can see here, we're making lower lows and lower high. So what I will do based on the 30-minute time frame, I will wait for a break of structure, which is this one actually. So if the price break this zone here, I'll just take my entry on the retest with my stop loss under the price there. So my first target for this trade will be the resistance zone of the 4-hour here. The other one will be the red zone, and all the other target that I spoke about in the daily time frame. So this is for my entry on the smaller time frame. Like I said, the risk of this trade there is higher than the one of the 4-hour, but the risk reward is way more interesting, and I lose more pips than if I wait for the break of the 4-hour. So this is for my the possible entries that I can take on USD CAD. Now we will talk about the trade that I took this week on the chart. So this week on USD CAD, I only take one entry, and I ended up losing the trade. So my trade idea was that we just made a new higher high, and that we will make a new the first higher low of the new trend. So my first target was the purple zone here, and the second one was the red zone. So around the price here, I went in the 1 hour time frame to see if there was a clear structure that I can take a trade on it. So I went to the 1 hour, but as you can see, there's no real clear structure that I can take a trade on. So I went to the 15 minutes, and since I was on the 15 minute, I knew that my risk will be higher because the structure is it's a small structure based of the move that I wanted to trade. So before taking the trade, I already knew that there was a higher possibility that I can lose the trade. So my mindset was already set to accept the lose that may happen. So let's see how I took the trade. So as you can see here, we made a structure. And at the break of structure, I took my entries on the retest of the retracement, and I put my stop loss above the last structure, which is this zone here. And then after, there was a lot of price accumulation, a lot of candle accumulation, and then we made a new pulse here. So then I moved my stop loss above the price there. And what we did, we did a fake break of the zone base of the 4-hour time frame. So the purple zone is base of the 4-hour, and we made a big jump like that. So I ended up losing the trade. So if I show you on the 4-hour, you will see that all of the price here is only a fake break. So as you can see here now, you can see that we just fake break the zone, and then we did what I was looking for, so the retracement of the purple zone and then the red zone. So I lose the trade, but as I said earlier, I was already expecting the fact that I may lose a trade because it was riskier. If I waited for a break of structure based of the 1-hour time frame, it will be like the trade will be like less risky than the one that I took. But in the end of the day, I accept the risk and I lose the trade, which is only a lose. So a trader lose some trade, he wins others. Like, it's part of the game. You don't consider a lose as a defeat. It's only part of the plan. So at the end of the day, you win, you lose. It doesn't matter as long as you're profitable at the end of the year. So only one trade that I took on USD CAD. So next week I'll do the same thing. I will explain the trade that if I take some trade on USD CAD this week, I will explain them in the next video next week, and I will do another chart analysis breakdown. So see you later next week.